Good morning and welcome to ADFW, to the Infrastructure Summit. We're joined here today by some really integral players in the infrastructure space.
Just went.
In Abu Dhabi and globally. I'd like to kick off this panel by covering some of the groups that we're speaking with to understand them a little bit more. And I'll start with Saud. What is ADIC? You work for the Abu Dhabi Investment Council. Can you talk about how does ADIC fit into Mubadala since the integration, and what differentiates you from other sovereign wealth funds?
Thank you, Alicia, and great to be here today. It's a pleasure to be here among some really great leaders of the finance world here at Abu Dhabi Finance Week. So on Abu Dhabi Investment Council,
This session.
we are a leading sovereign wealth fund based here in Abu Dhabi that was established back in 2007. We are a unit of the Mubadala Investment Company. We manage roughly $150 billion of AUM, and that is managed through what we call the endowment model of investing. Now, if you look at us through that lens, we're actually one of the largest endowments in the world. And if you compare us to the US university endowments, we're 3 times the size of the largest endowment in that space. In terms of how we deploy capital, we are always on the hunt for the best and brightest managers out there. So we deploy our capital through funds and co-investments, and sometimes through bespoke vehicles alongside these two structures. We are also mostly focused on the private market. So 65% of ADIC's portfolio actually sits in the private market. In terms of how we fit into the Mubadala group, I'll answer that question in 2 ways. The first is we are looked upon as the indirect arm of the group. So again, funds, co-investments, and SMAs alongside best-in-class managers, whereas Mubadala takes a much more direct approach to investing. The second point I wanted to make there is we present a great diversification engine to the Mubadala group. If you look through ADIC's portfolio, not a single investment, generally speaking, represents more than 1% of the portfolio. So we are a very, very diversified portfolio of investments, and that allows Mubadala to take on more concentrated risks and take on more idiosyncratic risks because of the diversification we provide. And in terms of the Abu Dhabi ecosystem, I think we fit very nicely into the Abu Dhabi ecosystem, and every sovereign wealth fund has a role to play. And I think we have a great role to play from that perspective.
Indeed. Thanks, Saud. And Rod, turning to you and ADQ, a newer sovereign wealth fund, could you tell us how ADQ fits into the Abu Dhabi's broader ecosystem and globally as well?
So good morning, everyone. ADQ was originally set up in 2018 as a development company mandated to oversee and guide the development of previously state-owned assets, mostly in the infrastructure sector, transport, energy, water, and waste management, each serving a distinct purpose in the local economy by boosting productivity, by enhancing trade, and by strengthening resilience. Every business needs reliable modern infrastructure to operate, to grow, and thrive. Infrastructure assets are the building blocks of a resilient local economy. The transformation we drive within our companies benefits other industries. Our portfolio management approach is focused on helping our companies drive transformational change and emerge as world-class leaders that can compete on the world stage. ADQ today is an active sovereign investor focused on critical infrastructure and global supply chains. Its portfolio comprises 7 different clusters, more than 25 portfolio companies, and an operational footprint spanning more than 130 countries. From 2019 to 2024, ADQ achieved an average annual profitability improvement rate of 25% across its portfolio of companies. Last year, ADQ contributed 22% of Abu Dhabi's non-hydrocarbon GDP and 13% of its notional GDP.
Great. Thanks, Rod. And Dr. Wahba, we've heard from the 2 sovereign wealth funds in infrastructure. You sit on the other side of the partnership fence. We're going to delve into what I² does a little bit later, but just at a high level, can you help us understand where you fit into this ecosystem?
First of
Just
all,
briefly.
thank you very much for having me on the panel. And it's really exciting to be here at the ADFW, which is really an opportunity for everyone to be able to mingle and understand a little bit what's happening in the global financial markets. And as we know, Abu Dhabi has become a key part of that global capital movements across the world. So I² Capital invests in infrastructure globally. We currently manage over $60 billion across different sectors, very much like what we just heard. We invest in energy, renewables, transport, logistics, digital infrastructure. I'd say in terms of distributions, 40% tends to be in the US, and then in Europe, and then in high growth economies, whether it's in India, Latin America, or Southeast Asia, and of course in the region here. So we look to invest for the long term, and we look to provide value add in addition to what you would expect to get from infrastructure as an asset class. So that's in a nutshell what we do.
Great, thank you. So we've seen infrastructure emerge as an asset class quite significantly in the last 20 years. I think the rough stats are that it's grown at sort of less than 2% of sovereign wealth fund portfolios to now at least 8% of those portfolios, which is sort of 4x in a short time frame. What are your perspectives and what have been your observations from where you sit, Saud, in the council on this growth? And in your opinion, has the allocations maxed, or is there still more to allocate to? Saud.
Yeah. So, so maybe I'll take you back to infrastructure when we first started. So in 2007, when the council was first established, an infrastructure group was also established at the time. And for many, many years, they actually weren't able to deploy the budgets that were allocated to them. The infrastructure space wasn't fully developed. In a sense, it was not very institutional. And they really struggled to find the right talent and find the right opportunities to deploy the capital into. Fast forward to today, the infrastructure opportunity is an amazing opportunity. There is a lot to do in the space. The talent that exists is great talent, exemplified here by Dr. Sadr. And you're able to express your investments in many different ways, up and down the risk spectrum and across geographies and themes. So it has actually become a very core and central component of any institutional portfolio today. In fact, if you look at the council by way of example, our allocation to infrastructure has actually gone up year over year and is expected to go up again in 2026.
Yeah.
So it's really an important part of any institutional portfolio going forward.
Thank you. And Dr. Sadek, what's your view of this as you're looking at infrastructure investments globally? Are you seeing areas where it's becoming crowded and competitive, or is there a number of opportunities that remain available that are attractive?
I've been investing in that sector for a long time, and the question of is it being more competitive than ever, and is it crowded, is the same question I've been hearing for the last 30 years.
Yeah.
And so the short answer is it's competitive if you have a very narrow view in particular sectors, but at the same time, it's really cyclical. So some sectors become quote unquote more competitive than others. But in the long run, what I've seen over the last 30 years is truly an explosion in the demand for infrastructure for various reasons. Historically, over humanity of the last 10, 15,000 years, most people have lived in rural areas. You now have more people effectively living in urban areas than in rural areas. And that requires an enormous amount of infrastructure that needs to be built. You're looking at the development of a new equivalent to New York City practically every week globally for the coming 30 plus years. That's a staggering number. At the same time, broadly speaking, governments have not been able to deliver the kind of services that people have been expecting in the last 20, 30 years when you compare it to, let's say, the 60s. And so the inability to deliver the kind of services people expect, whether it's in education, health, and other things, means that the amount of capital available to deploy to all of these services, including infrastructure, is not readily available. And then you add on top of that the fact that you have budget deficits that have increased over the last couple of years, or the last decade actually, to levels which makes it difficult for governments to be able to allocate capital in an efficient way, especially to long-term investments when they have immediate short-term expediencies. That suggests that the sovereign funds, pension funds, private capital, whatever, have a role to play in the development of that infrastructure. So that's one element. The second element is Southeast Asia and China and India have been effectively a major engine, right, of economic growth globally. 70 to 80% of the growth, of the new growth that's going to come in the coming 2 decades, is going to come from that region. And so there, the needs for infrastructure are massive. So there you see a lot of opportunities, which was not necessarily the case a few decades ago. So what you're seeing is an increase in demand for infrastructure, not sufficient capital to be able to do all the kinds of things that you want. And then add to it now the potential for AI infrastructure that needs to be developed, which of course we're reading every day in the newspapers about the fact that we need to spend hundreds of billions of dollars in the development of data centers, fiber optic connectivity, power generation, to be able to feed all of that. So yeah, I think the concern is not a lack of opportunities or the competitiveness. I think the concern is more the prioritization of infrastructure globally.
Great. And so I'd love to ask each of you actually what sectors and regions within the space you're finding most attractive at the moment.
So I would say it's a very tough question because infrastructure today is really a global opportunity. There are pockets of value in every geography. As Sadaf just mentioned, governments are constrained. They aren't able to spend as much going forward on infrastructure as much as it's needed. So private capital will need to really step in. And as Sadaf mentioned, the big themes, whether it's the digital world and the trillion opportunity in the data center world. You have energy transition, you have supply chains, being reconfigured, and you have other themes like the social infrastructure, by way of example, which will need a lot of spending to come in for. Each one of these themes is a huge opportunity set on its own. If you were to really push me, I'd say maybe the digital and the energy transition spaces are probably, they probably edge the other ones by a small margin. But all of these themes actually present amazing opportunities in the coming years for private capital.
Do you guys have anything to add to that?
No, I think Saud is absolutely right. You think of it this way: you have a six, just to simplify, like 5, 6 by 3 matrix, right? Could be energy, could be renewables, could be transport, digital infrastructure, AI infrastructure, and so on. And call it 3 regions, just to simplify: US, Europe. Then you can add Middle East, you can add Southeast Asia, you can Australia, and so on. So you have a large matrix. In that matrix, you're going to get null sets. So there are sectors within these regions you're not going to invest in for whatever reason, either because the regulation is not there or because, as you were alluding earlier, it's competitive, and therefore that's not necessarily where you want to be. At the end of the day, the key is this: do you have a global capability to invest across all of these sectors in the different regions? And I think that's the condition precedent that you need to ask yourself. So if you're an ADQ or you're an ADIC, you're in a position to be able, me excluded, to attract the best talent so that you can decide based on your portfolio allocation where you see the opportunities. So if you want to invest in, I have no idea, renewables in Australia, then you say, this is what I'm looking for. Or you want to invest in someone who has a global perspective, this is what you're looking for. So I think there is no, I agree completely, there is no particular sector that you can really talk about. If I look at the US, for example, up until 9 months ago, the renewable sector was highly attractive. So overnight, that sector becomes less attractive because of a change in administration and regulation that basically thinks, rightly or wrongly, that renewables is not a priority. And if the government is to subsidize a sector, it should not be that one, but should be something else. And in fact, in fairness to the administration, they said, we're not interested in this, but we're interested in these particular sectors related to onshoring of industry and manufacturing. So here you see a shift. And so literally yesterday, you would have thought the renewable in the US, given the size of the economy, is extremely important, less so today because of regulation, but other sectors become more interesting. So you have to have that nimbleness and flexibility to be able to allocate capital.
Mm-hmm. And Rod, ADQ is in 25 countries, sorry, has 25 major companies in over 130 countries. You've got an almost $300 billion portfolio. Yet partnerships are a really critical element to what you do. And we've heard that just in the last 2 answers. Can you talk about sort of how ADQ approaches partnerships?
Sure. Partnerships are essential to ADQ. I think what we're looking at the moment is infrastructure today requires scale, technical depth, and long-term capital. No single institution can deliver on that alone. ADQ partnerships allow us to combine our sovereign capability with specialist operators so that essential infrastructure can be developed more efficiently and with greater impact. Partnerships give us speed, flexibility, and the ability to scale our projects that would be difficult to do alone. They allow us to match our long-term capital with partners that bring deep operational and technical expertise. Examples being ECL, which is a $25 billion energy platform focusing on new build power in the US market. IFC, bringing its renowned governance and values to the emerging markets. To Plenary, who's an Australian-based developer with expertise in public-private partnerships, and to Orion, which is a US-based fund focusing on the mining sector, who we've formed a joint venture with to execute investments in mine financing. Partnership platforms create shared accountability and disciplined governance, which are essential in our complex core markets of energy and utilities, transport, logistics, and data transformation.
Great, thanks. And then looking at the council and I Squared's partnership, it's an LPGP partnership that I think many would envy and love to emulate themselves, particularly probably groups in the room. It'd be great to hear from your perspective, Sal, what makes the council a valued partner and what the council values in GP partnerships, and then I'll turn to you, Dr.
Should I leave
Sadek.
the room now, or
Pardon?
should I leave the room?
So, as we were preparing for this panel, Sadek jumped on the call when we were talking about the partnership. And one thing I said on the call was we were one of the very first backers of I Squared when Sadek, Gautam, and the team came out of Morgan Stanley. He actually very quickly jumped in and said, no, you guys were actually the very first backer of I Squared when we came out of Morgan Stanley. Now, this is a partnership that we cherish very much. We have gone from strength to strength together. It's a partnership that is built on common values, on trust, and of course, in the investment world, performance. Sadek has been able to deliver. But what you get from us as a partner is we see Sadek as a true extension of our team. We don't have offices outside of Abu Dhabi. So the managers that we partner with, they are really our arms and legs in the geographies that they represent our capital in. So we see them as true extensions of our team. We give them very honest and timely feedback when that is needed, or when we feel there is something that we can do together that they may not be seeing. And most of all, what we tell Sadek is, as long as you keep delivering on performance and on all of the other metrics that we see from him as a fiduciary, we will continue to be there as a partner that will continue to deliver on our promise to keep backing him over time.
Mm-hmm. Great. And Dr. Sadek, could you take us through a little bit how that relationship evolved from your side, and including, I guess, any advice you might have for others wanting to walk the same path as you potentially?
I think the advice is really the same, which is the performance is the single most important thing you can deliver, because at the end of the day, that's what you're measured on. And I think the second element, which is, I'd say, almost equally important, is transparency. Investors like to understand and like to be told what's going on, both the good news and the bad news. I think that's an extremely important element, so that you're able to explain quickly in a transparent fashion the good news, but also the bad news. Now, I Squared happens to have had no losses since its inception. It doesn't mean it's not going to happen in the future, but the point is to be able to constantly and consistently provide information on what's going on, both as a GP and as an investor. That, I think, is the single most important thing you can do. When you combine the two, I think there is something which is extremely important, which I think people from the region here would understand, which is really loyalty. You need to be able to provide that relationship where people can trust you and know, as we say, know where to find you when something goes wrong. And I think that's extremely important.
Good words of advice. And looking more closer to home here at the Middle East, I've been here 18 years in Abu Dhabi, and it's never been a more exciting time, both in Abu Dhabi and regionally. And I understand, Dr. Sadek, that you guys are now looking to invest in the Middle East. Could you talk a little bit about the opportunities that you're seeing locally? And we'd be really interested to understand as well what global LPs, the shift in their appetite for investing in the region as well, what your observations are in that regard.
So I think there's two questions here. The first, let me address the second one, which is the LP's appetite to invest in the region. I think that is slow. When you talk about LPs, we broadly talking about institutional investors that are looking to invest in the region. And I think it's relatively slow because the opportunities, relatively speaking, are not there, understandably, right? Because you have capital in the region that is traditionally invested in the region at a cost of capital, which is what you would expect for, let's say, the Middle East or the GCC. That, of course, is changing. And as opportunities grow, as the role of the private sector continues to grow relative to the public sector, you're going to get more and more opportunities to invest. And I'm not talking here really around infrastructure for now. On a broader level, I think the region has been extremely exciting over the last 5-10 years. And there's been certainly a fundamental change in the way the Saudi economy has been effectively managing itself. And that is creating a massive pull into the region, which benefits everyone. So I think that's an extremely important element. From our perspective, I look at the opportunities in the region in two respects. Number one, not a question of government not having sufficient capital, because the government over a longer term has the ability to allocate capital as opposed to, say, industrial economies that have a genuine issue. I think there is a desire on the part of the government to be able to deregulate and encourage both domestic capital and international capital to come in and turbocharge the economy, especially in new areas, whether it's AI or biotech or technology, broadly speaking. I think what's extraordinarily important to remember is when you look at the human development statistics of the 1990s in the region, the illiteracy rate or literacy rate on average for the population was around 70%. And in 1991, 92, there was a very important influential report issued by the World Bank on what the Middle East needs to do over the coming 2 decades. You look at the same statistics today in terms of literacy rates, that number is close to 99%. That's an extraordinary achievement. So when someone tells me where are the sectors you want to invest in, I would tell you in that sense, except for the details, of course, I'm agnostic, but what excites me the most is the extraordinary jump in human capital. The best, the most attractive part in the Middle East, and people are not recognizing it yet, is not the capital, is not that you have huge sovereign funds. It's actually the talent that you have in the region. An extraordinary pool of talent, which in the last 20, 30 years, in my view, competes with any other talent across any other region. And that's what excites me the most.
Thank you. And what about Rod, from ADQ's perspective? Do you have a balanced local versus international approach to the allocations, or where are you seeing?
Our background is really one of, we have national assets that are in the utilities, transport, logistics, and we utilize them as best as possible. So our focus to date has been very much on making sure those businesses are growing, are productive, and going forward. So there's a transformation now that we're starting what was previously been opportunistic in terms of international viewing is now becoming more mainstream. So we're looking internationally a lot more. It will be gradual, it will be slowly, it'll be very measured. So we're taking the talent and skill that our companies have, and with the 4 things that ADQ brings to the table, we are very fortunate to have capital, and we're very appreciative of that. Secondly, we do deals for the long term. We're not a short-term player. Thirdly, we will do greenfield, which is rather unique for a sovereign.
Yes.
And fourthly, where one of our greatest assets is really the G2G relationships that we have. We're very fortunate to have a chief executive who's also a Minister of Investments. That comes with its downside when he goes to visit, because there's a lot of work we have to do after those visits. But it gives us an opportunity to utilize our own assets on the international stage. So it gives a great deal of comfort to other governments that were reaching out and asking for our help, where we can actually not only provide an investment, we're there for the long term, but more importantly, we can utilize our assets as we go forward.
Yeah, I'm sure that will just get busier. There's 14 CEPAs that the UAE has signed, and that's increasing. So no doubt you'll have more and more coming your way. Saud, private credit is, increasingly a focus, however, isn't new. What do you see in the infrastructure and real asset space in terms of the interest in private credit in infrastructure?
Yeah. So again, just going back to the opportunity set, infrastructure is going to need a lot of capital going forward in all of the different verticals that I mentioned earlier. And you'll need to be in every form of capital that infrastructure presents. Private credit today is an attractive proposition. We have some exposure in our portfolio. We've been exploring something with Sadiq as well. We have a credit team at the council who is a generalist credit team that also looks at the opportunity set, whether it's infra, real assets, private equity, etc. But generally speaking, we have exposure and we're looking to do more in this space.
Great, thanks. We all saw Abu Dhabi on the world stage this weekend for F1. It's been, I think, 16 years it's been running. World-class event, world-class facilities. You can't do that without having world-class global scale infrastructure. Saud, were you able to enjoy any of it?
Yes, so I did attend, and I enjoyed both the race and the company that was around me at the time. But as you said, just bringing it back to infrastructure, the infrastructure is just amazing around that area, and it tells Abu Dhabi's story really over the last decade or so. The entertainment infrastructure is world class. Cultural infrastructure is world class. Transport is world class. We have great education, great healthcare, and if you think about it, that is why the momentum has been very strong. That is why talent wants to be here, and we're proud to have been a small part of that story as ADIC.
Thank you. That's it for the panel. Thank you very much, gentlemen. I learned a lot listening to you today. Thank you.